Hello, everyone. Welcome. Thank you for joining us today. Today's session is brought to you by the Office of Small Business at Prosper Portland, the central point of entry for Portland's small businesses. We're here to support you when you have questions about accessing City of Portland services, navigating Prosper Portland programs, or finding local resources. You can connect with us anytime at pdxofficeofsmallbusiness.com or by calling 503-241-4594. And now I'm excited to turn it over to our presenter, Shannon from the Division of Financial Regulation at Oregon Department of Consumer and Business Services. Take it away, Shannon. Thank you.
Thank you so much, Dan, for the intro. And yes, I'm with the Oregon Division of Financial Regulation and got three major areas that I'm going to try to cover in this hour that we have together. First, I'll share a little bit about what it is that our division does and a little bit about the free advocate support that if you run into difficulties with insurance or a number of other financial service products that we regulate, we are a free resource for Oregonians to get questions answered or to get some help troubleshooting if you run into some difficulties with a transaction. And part of what we respond to are natural disasters in our state that often involves insurance at the time. So I'll be covering that as a little bit of an intro, and then we'll jump into talking about some types of insurance for business, some ways to safeguard, manage risk, based around, accidents may happen, disasters may happen. So these are the things that can help us recover. And then also spend a little bit of time understanding what to watch out for in the insurance claim process that would follow. So those will be our stopping points for today. So a little bit about the Division of Financial Regulation. Again, we're a part of a state agency, and our mission is about protecting Oregonians' access to fair products and services through education, regulation, and consumer assistance. And we actually sit under the Department of Consumer and Business Services as an agency. We are Oregon's largest consumer protection and business regulatory agency. So we sit alongside building codes, Oregon OSHA, and then workers' compensation, just to kind of let you know who are our neighbors. We're all working for workers and for business success, ultimately. And the Division of Financial Regulation, it's in the title a little bit that we're teaching financial services. We are the insurance commissioner for the state of Oregon, so a lot of the types of calls, issues that elevate to us are around insurance, but we also oversee a number of other financial services. So you see mortgage servicers on here. We have a student loan ombuds. We've just added licensing and regulation for data brokers. So it's a lot of things that touch money. So this just gives you kind of the flavor of that. But we're responsible for monitoring and examining insurance and financial institutions for financial soundness. We write, review rules that guide protections for consumers, and we're making sure that we're reviewing and approving insurance policies and rates to make sure that they're complying with legal requirements and aren't in excess of the state rules. So quite a few things that go on behind the scenes in our work. Some of the professions out there that touch money also require having licensing and continuing education, and so we're involved in that process. One of the things that I like to make sure that everyone knows, and I think you are all in the referral business, we have a team of consumer advocates that are available, and our advocates come from industry, so they have deep knowledge in the industries that they represent. So they were former mortgage brokers, they were former insurance underwriters or insurance adjusters, so they have deep knowledge in the topics that you might be calling about, and they're available to assist with questions or sometimes things lead to a formal complaint process. And so we're going between the companies we license and regulate and the consumers to help resolve issues. So our advocates are a busy team, but they're very reachable, very accessible. So this just gives you a snapshot of what kind of activity we had for last year. We served just under 18,000 Oregonians in our complaint process. That was over 5,000 complaints resolved. And that returned about almost $9 million to Oregon pocketbooks for things that might not have paid out without some additional review. So Should you be thinking about reaching out to our advocates, I'll have a slide towards the end that has, email address, website, and the phone number again here. But our offices are open Monday through Friday, 8 to 5, so you can always reach out through our phone line as well. Some reasons people might call us, again, maybe it's difficulty understanding a decision or communication that came from an insurance or financial services company. Maybe there's unhappiness around a claims determination. A lot of times it's just somewhere people are stuck in a process. It's just getting that next step clear of what to take. We also check licenses, and sometimes that's helping people avoid potential scams. And then we're always a place that you can check to see what your rights are as a consumer. So lots of support that we can offer there, and that's all free. Our team also produces a number of consumer-facing publications. They're talking about money issues. Most recently, we put out an Oregon Investor Guide, but there's all kinds of topics here, and I'll make sure that you have some links to this information so that if you want to go and see what's in our library, these are hard copies that we can get out. We do have some of these materials also available in Spanish. And then there's a few items I'm just going to introduce. So we have our Oregon Small Business Guide for insurance and worksite safety. And then also really hot off the press are our business insurance guides. These are guides to commercial property and casualty insurance. We've got one that's fairly comprehensive for thinking about like should all businesses be thinking about, but then some very specific information around how does kind of the underwriting process go for nonprofits, shelters, childcare providers, and restaurants. So some pretty unique information for those industries. So that's all available on our website, dfr.oregon.gov. But again, I'll make sure that you have some links that you can refer to in the future. So let's jump right into it. Now let's talk about threats. I know that's not the emotional direction we may want to go, but Oregon's geography and climate is exposed in a number of ways to potential disaster threats. And climate change only puts us at a higher risk for extreme weather that we've already seen it this last year with more flooding in parts of our states. We contend with wildfires every year. It just was, a year, 2 years ago that we had a number of ice storms. I know that impacted a great part of the Portland area and areas around. We're still taking claims calls about those ice storms 2 years later. So definitely impactful. And geologists are warning us that we're due for the big one, a high magnitude earthquake involving the Cascadia subduction zone off the Oregon coast. So a number of potential things that we may have to contend with and plan for recovery for our businesses, for our homes. And that's something to think about. If your business or home and possessions were destroyed by disaster, how would you recover? What would it cost to replace your assets or possessions if you lost them all? And disasters will happen. It's not a matter of if, but when. And the moment disaster strikes, that time to prepare has already passed. So we have a lot of talks like this around the state. And one of the things that we're really trying to encourage communities to think about is, why do people not prepare? And that's often due to something called normalcy bias, which is, I kind of put the picture in my head of someone sticking their head in the sand like an ostrich. But it really is a belief that people just don't think that it's going to happen to them, that really their risk is really minimized, the threat's really not there. And so as a whole, we tend to underestimate, the likelihood for disaster occurring and how bad the disaster would be. And that normacy bias causes many people not to adequately prepare for natural disasters. So we're going to talk a little bit, how insurance is a big part of recovery, but some things to think about that you can, be preparing for that puts you in a better place to, make those claims later, aid in your own recovery and have it be less stressful at that point in time. I threw this slide in just because I think, this is kind of leading into a question that we're getting. Why are the rates going up so high? Why are we seeing companies not want to write policies, or we're hearing about companies leaving markets like California and Oklahoma and elsewhere? And as a whole, the industry has faced a lot of losses. Oregon's faced a lot of losses. So this is showing over time, looking back by decade from the 1980s, what were the claim amounts happening? And so you can see that it was relatively small. We weren't even over $500 million in losses, anywhere close to that for 40 years. And then we get to the 2020 wildfire season and thereafter, and we're almost at 3 billion in losses just for wildfire. But there's also a number of losses for like the winter storm that we had. So it is hitting the pocketbooks of everyone, and the whole pooling that we have around our insurance prices are certainly impacted by these natural disasters. So it's here, and it's definitely impactful. I wanted to share a little bit more about what goes into rates for insurance. Just thought this might be interesting for you all. So before we talk about different types of insurance coverages that are available for business, let's talk about the factors that impact availability and affordability for insurance, and what to do to find insurance that perhaps is more affordable and accessible. So a few factors that are impacting affordability and availability, and this hits a lot with home insurance policies, but we could run it into it in the business arena as well, is the increase in frequency and intensity of natural disaster. You just saw some numbers about that. Insurance companies are paying out much more in claims than in previous years, and in some cases, they're paying out more claims than they're receiving in premiums, which is not sustainable for them. So they're going to look at raising premiums. And then points 2 and 3, the cost of building materials and labor has increased. So that results in higher costs to repair and rebuild damaged structures. And as the costs increase, well, so do the premiums. So it's definitely, you kind of think of as like the industry's trying to recover after, big expenses that have come out in the last few years. So DFR's role, as I kind of alluded to earlier, is that we're a regulator in part for rates. So before an insurance company charges a premium, it must submit a rating plan to DFR that shows how it determined the premiums it's charging. And then we've got actuaries that take a look at that information. So DFR is going to review the rating plans to make sure that they comply with the law, and that the premiums must be based on real costs paid by the insurance company in the past and on a reasonable prediction of future costs. So really, the law that governs all of this is that, premiums are not to be excessive, inadequate, or unfairly discriminatory. So we're assessing that when they turn their rates. So the good news is that we're not seeing a bunch of carriers leave the Oregon market. The way our policies and regulations are set up, it's still a good place for insurers to do business. So we're not seeing exactly the same situation as maybe some of our other states. So, but yes, prices are going up, and that is a reality for all of us. So a couple of lessons learned from the 2020 and 21 wildfires. We certainly learned a great deal as we walked alongside consumers that were working through recovery and working through their insurance claims. Many people were underinsured, and I would say that's probably the case today still. A lack of record keeping for contents of homes or for businesses, having good inventory counts and whatnot, complicated the claims process. People lacked knowledge needed to use their coverage and access available resources. So we're doing a lot of that kind of education throughout the state to help people be more aware. If you have a homeowner's insurance policy or renter's insurance policy, knowing that you can tap the additional living expense to see yourself into hotels and some of those extra costs while you're working on recovery. Those were things that people didn't realize they had inside their coverages. People lacked awareness that there's, for example, DFR advocates to help along the claims process. And many people have expressed being, regretful, not being more prepared for the disaster that occurred in their community. So certainly some things that we think about. And again, we want people to know that there is some free help to get some guidance if you're ever in a situation such as that. So let's transition a little bit into what to think about for disaster preparedness planning. And so here's some steps that we can kind of walk through together. First of all is to take a look at where your business is at or where your home is at, and assess and mitigate what hazards might you face, where you live and where you operate your business. Then be thinking about evaluating your insurance needs as well, so that you can find appropriate coverage. What is adequate? And I really see insurance as kind of it's a sharing of risk, right? So sometimes it would be nice to be covered at the highest levels possible, but the price tag is is not something that is really doable for the budget of the business or a budget of a home. And so it's figuring out to what degree are we going to share those costs if disaster or an accident occurred. And so those are some things to think about. But there might be some areas like, I bought my home near two creeks, so flood insurance became a part of a have to in our desire to purchase this property. And so those could be some things and some considerations you want to have for your business or your home as well. Highly recommended, and again, that's from that lessons learned list, that creating in advance and maintaining equipment lists, what kind of merchandise do you have on hand, warehouse and inventories. This would be the same for your home, having a home inventory. It's about being able to document what was there at the time of loss, right? Some of that you can see physical, but if it's, a big firestorm of, wildfire that comes through, that's going to be harder to prove through photo evidence, right? So be thinking about where am I duplicating information? Is something stored in the cloud that I could get access to, so I'd be able to show those types of records, and are we regularly maintaining them? So you kind of need to have that go bag, or in a sense, some kind of a backup of electronic information so that you'd be able to provide that information to your carrier, to your insurance agency. We'll talk a little bit about what might be in your go bag for financial documents in just a few minutes. I'll have a slide on that. And then, part of being prepared is to also understand the claims process and what to do afterwards. What are some things that you can take action on right away? You've got maybe employees to consider, safety of facilities, when can we reopen, all of the rebuilding components that might be involved. Those are some things that you can think about now to have a plan in place. Even how you're going to communicate. So those are some things that are kind of some stopping points for having a unique plan. So let's talk a little bit about building a financial first aid kit. What is often overlooked is that we should have our insurance policies and other important business records in a safe place offsite, or in a go bag, that thing you could grab and go if you had to leave right away. And having this information, again, can help us get the recovery process started more quickly. You're not having to gather, try to recreate, and struggle in that area. And just like your emergency kit that you would have for yourself, this is something to already have ready. So making copies of and securely storing your important financial, legal, and identifying documents is really important. Also, maybe creating a list of account numbers, contact information for if there's a mortgage, if the utility providers, all other financial service providers that you use, all of that would be good to have in one place. And then if we're talking paper copies, that might have to physically go into a go bag or a safety deposit box maybe. Or again, thinking about, digital ways that you could store that securely online. So this again has some lists of some things to think about. I know I'm thinking about a business that was over on the coast, I think in Manzanita, that really struggled on their claims process just because they didn't have really good sales records. And that was something that was going to be required for some of the types of insurance options that they were carrying in their policy to be able to submit and make a full claim on. So if you end up with a partial closure of the business or complete closure of the business, if there's any kind of disruption that might be happening to the supply chain that you're a part of, you might need to also be gathering records from up or down on the supply chain if the disaster is potentially impacting more than just your business. Inventory around photos and videos are great. I know when you've got changing inventories, that's a little harder to do, but being able to say, this is everything that was in the office, this is everything in these storage areas, these were all the things that were in the yard, and updating that on a regular basis is certainly powerful when it comes to the claims process and you're trying to record everything down that was lost. But yeah, titles and proof of ownership, loan documents, all of that is really important. So, but it's going to come down to, do you have sales reports, balance sheets, income statements, proof of how much money the business made? Those are going to be some things you'll want to be thinking about gathering or being able to have access after a disaster. So how to respond after disaster. We have a guide available, and I'll put this in the chat here in a minute as well. But we have a post-disaster claims guide. It's actually a pretty thick one. I think it's comprehensive. And these are some suggestions pulled from that guide. So have a copy of your policy and, you know, start taking a look at what's inside the policy, because that's going to give you some idea of what's covered. You can look at your declarations page. And if you don't have a copy, generally you could access that through the company's website or have them send you a copy. Before filing a claim, consider the costs and benefits. And this is something we recommend for anyone. You might have a deductible that you're going to be making. If it's going to be a small claim, is that going to ultimately cause your premiums to go up unnecessarily? Is this the conditions of loss that would really benefit you on making a claim at this time? So if it's going to be a small claim amount, we're certainly advising to give some extra consideration there. And you can always be talking with your agent or your insurance company about the impact of filing a claim, because there's really a difference about making an inquiry than filing a claim. So some people make the mistake of filing a claim before they understand whether or not their policy will pay out, and if it will, how much the claim payment will be. So, a claim is a claim. It actually starts the whole process. So you can make an inquiry and just say, hey, I'm not making a claim yet, but I have some questions. And that's quite all right to get some more information to help you in your decision making. Definitely consider your deductible in that equation. Is the loss significant enough? And then be thinking about, reported claims will be on your record for at least 5 years, and that could affect future premiums or the ability to get coverage. So those are realities. If you decide to file a claim, contact your insurance company to get started with the claim, and just be sure to take careful notes. I'm somebody who values getting things in writing. I want their responses in writing and not just a phone call. Even if I'm going to summarize what the conversation was in an email, this is how I understood. Can you acknowledge this is what we stated? That's always good. Certainly that can help us in a complaints process scenario as well. But I think doing that note taking of who you talked to and when and what was discussed is invaluable. Some responsibilities for being the individual or the business that's insured is to take responsible steps to prevent further damage or theft after the disaster, let's say. You have the responsibility to mitigate damage, and when necessary, cover damage to like roofs, walls, windows, use tarps, use plywood if it's safe to do so. And you can always ask your agent or your claims adjuster what you're expected to do based on your situation. And then if you've got any costs that you're incurring during that time, to save those receipts, because that might be something you can then put in with the claim. Take photos and give your adjuster time to assess the damage. Don't throw anything away. So this is something that sometimes people make the mistake of starting to clear out everything before they've had good photos or that adjuster's been out to the property. And so then there's less for them to see physically at the time of just how much damage is there, or what was the quality of the thing destroyed, because you might be looking at recovery costs and they're supposed to return you to something that was of equal quality. So be thinking about timing for that. But yes, taking photos and again, getting that adjuster out there is important. So don't be a rush to get all the things prepared and rebuilt before you get instructions from your insurance representative. Again, keep all receipts for mitigation work and for the cost of being displaced. So I think of this in the homeowner's insurance sense, like if you're going to incur hotel bills, restaurant receipts, pet boarding bills, that sort of thing. Because often, disasters hit our community. It's not just our businesses, but our homes nearby. So those might be factors in your claiming process. That will aid you if you're touching like additional living expenses as a part of a home or renter's insurance policy. So let's talk a little bit about debris, what can be inside your coverage. Debris removal may have some limitations in your policy coverage after a loss. This could be a significant financial burden. We're seeing this with some homes over in Wasco County that they're doing like some second phase cleanups now, but debris removal has been the headache for everyone involved. And so you want to pay attention, does your policy have any limits to that kind of coverage, a limited amount? And then, being clear on what the contract says. I think those are some good questions to have. And then be thinking about the rebuilding time. It can be a rough time rebuilding when many structures are impacted in a specific area. So I'm thinking about Southern Oregon and places like Phoenix and Talent. There's a lot of homes, a lot of businesses involved all at once. And contractor material shortages come to mind. That could delay the process for a rebuild. So pay attention if there's any kind of contract language in your policy about rebuild times, and even maybe the location of where things could be rebuilt on the property might be communicated there. So just a few things to think about. Once you've initiated the claim, here's typically how a claim is handled. So I would say, this will feel similar between a business policy and a home policy. Your insurance company will assign an insurance adjuster, and an adjuster is a person professionally trained to assess the damage to your property. And your adjuster will start by asking you questions to understand the nature and scope of your loss. Their first step generally will be to assess and document the damage. So they may send an adjuster to do this, or they may give you the option to work with a mitigation company and or a contractor to complete that assessment. In this case, your insurance company may provide a list of mitigation companies or contractors that you can choose from. And you could pick one of those companies, or you can select one on your own. So you have that option as a consumer. There are pros and cons to each option. If you use a mitigation company or a contractor that's recommended by your insurer, they have more responsibility for the quality of work performed by that company. And if you have a dispute with that company later on, the insurer is able to step in on your behalf. On the other hand, if you shop around on your own and select from a broader range of companies, that'll be something that you're going to have to kind of go battle for. Keep in mind, in the case that you choose your own contractor or mitigation company, any dispute, again, would need to be settled by you. So a damage assessment should note the degree of damage, the quality of the existing materials and workmanship prior to the damage, measurements to calculate material quality, quantities, and that sort of thing. So it's kind of an initial estimate if you want to think about it. Keep in mind that the adjuster is not a licensed contractor, and so their assessment only serves as an estimate of the cost of repairs. So it does not determine like the final settlement amount. The contractor that will be involved eventually will ultimately be the one to assess the scope of work and will write up a bid to complete the repair and the rebuild work. So it's a good idea to be soliciting more than one bid. Might suggest 3 from licensed contractors. What might the payment process look like? So your full claim may come in multiple payments depending on the nature of your loss. For any payment, be sure to understand what the check does and does not cover. That's the kind of stuff I like to get into writing. So one thing to think about is be wary of initial settlement offers that are represented as a full settlement that requires some kind of release of further liability, because that could then close out the claim essentially, and that's what you're accepting. I'm going to apply this to kind of like a home example here, but if your home is destroyed or not inhabitable, your first payment may be emergency advances that may include those additional living expenses that we mentioned. And then keep in mind this also is this amount, these initial payments that might come to you are counting towards your total final claim settlement. So if there's any kind of maximums that are going to pay out, any checks coming early on are going to be totaled into that final amount, any final limits. If your claim involved damage or loss of possessions or content, so this applies to business policies as well, depending on the extent of your loss, the insurer may pay you a percentage of your content limits. And then they're going to be considering actual cash value likely for those. So that's a depreciated value on the amount. So if there are furnishings in an office or it's, the couch in the living room, that's usually going to be a depreciated value for the lost possessions. So, so there may be a difference of what it's going to actually, take to replace some of those items in that case. Something that came out of the 2022 wildfires has been some new legislation in Oregon, again, to be thinking about consumers that are facing these losses. So when there are certain conditions that present, so like a declared disaster by the governor, there's a law, HB 2982, which requires insurers to pay 70% of your content coverage limit without needing you to have itemized losses. Again, that was something that was really stressful for claimants at the time, and a lot of activity happening in an area at once. And so this would get money flowing. But then again, you're going to provide itemized lists at some point. It's just going to help get some of that money flowing in an earlier payment. So if you have damage to dwellings or detached structures, again, you may be issued payments by your insurance company in both your name, and if there's like a mortgage company involved, the money is often put in an escrow account, and then it's released to the policyholder as the repairs or the rebuild work is completed. So your lender may want to see the contractor's bid and how much the contractor wants up front before they're going to release any funds out of the escrow account. And then your mortgage lender may also want to inspect repairs before the payment's made. So, it's kind of like three parties at the table there. In most circumstances, if additional damage is discovered later, you can reopen your claim and request additional compensation, provided you haven't exceeded the limits on your policy. So each policy is going to have language that states how much time you have to settle your claim, as well as timeframes for rebuilding. And so, again, I think you want to have those timelines in mind as you make your plans for the rebuild. So let's talk a little bit about tips for the settlement process. Your claim settlement timeframe is going to depend on a couple of things. So severity of loss, it's like a total loss versus a partial loss, and like reasonable rebuild time. Number of homes and businesses that were impacted in your area by a disaster event. Contractors may be difficult to schedule, so that's going to prolong the claim process potentially. And then how well you document your content. So really, I think that preparation piece and kind of keeping that in like a good maintenance of again, equipment lists, inventory lists, that sort of thing, can really make a difference when it comes time to claim. Some tips for the settlement process. Do not feel rushed or pressured to agree on a settlement. Do keep in mind that there are timeframes for all aspects of the claim that are written into that policy contract that you have with them. And you're always within your right to ask for clarification when needed. So if something does not sound right, ask the adjuster to show where it says that in your policy. Your adjuster should answer your questions in a timely manner. And if they do not, that's why our advocate office exists, is, sometimes we're helping get that information for you, get things moving again. I've seen instances where in a 2-year claims process, adjusters change 3 or 4 times. So you're getting handed off, people have incomplete information, somebody might be in training, things fall through the cracks when that happens. So sometimes that's necessary to involve one of our advocates. Through your agent. So in general, your agent, who you're probably usually familiar with talking to, can't really help with that adjustment process. They can help you understand policy details. So do think of them as a resource for that if you're really trying to get into the nitty-gritty and understand what your coverages are about. Good things to maybe be thinking about having that conversation annually to make sure that you're not getting into a situation where you really are severely undercovered, especially as businesses change and grow, and there's things that get added or things that get downsized maybe. Stay organized and take good notes. It's likely you will have numerous claims adjusters, as I mentioned, before everything is done. So you want to make sure that you've got consistent source of information and you can refer back to. If you have to file a complaint, again, our advocates have more leverage if you have good notes or copies of emails and correspondence. And so again, that's why I think it would be really good to stay organized about that. And as much as you can, get communication in writing. If you have a phone conversation, summarize what was discussed in writing and email it back to the adjuster to confirm that your summary is accurate to what you guys discussed. And then I have a note here on public adjusters as well. So a public adjuster is someone who can help you navigate the claim, but they're paid for their work by you, the policyholder, and not the insurer company. They don't work for the insurance company. The public adjuster will generally take their percentage out of any payout that you receive. So factor those costs in if you decide to go with a public adjuster into your considerations. The insurer will pay out the amounts due based on the policy, and the policy holder will then need to pay out that public adjuster from those funds. So in essence, it's going to reduce what you have available for repairs and replacement. So just keep that in mind. And unfortunately, with disasters come scammers. Anytime people are displaced or feeling stressed, that's when they're more vulnerable. And I know when we had the wildfires in Hawaii, this was highly noted how much there was scam activity on the communities. So it's super unfortunate, but it definitely happened. So to avoid disaster scams, your best defense is just to be aware of some of the common tactics. And I think in this day and age, we just need to be skeptical of everyone. You know, even if we're familiar, if they're familiar and we feel like we do business with them, is it really your bank calling you kind of thing? But look out for fraudsters following a disaster. Could be anyone asking you to pay upfront fees to help you for your claim services, and it could be around getting loans for something. If there's someone showing up that's sounding like a government employee is never going to charge to help you to get access to a benefit or a service. So if anyone's trying to charge you in those instances, probably a scam. If you see anyone walking around representing an insurance company trying to sell you a policy after a disaster, that is likely a scammer. Contractors too, if anybody's contracting, selling repair services door to door, especially if they offer deep discounts or they ask you to pay up front. We've seen it a time and again where people are, laying $3,000-$5,000 down and they never see the people again, so that's super unfortunate. And they're playing on the fact that it's going to be harder to get contractors. So we highly recommend that if you are hiring, find somebody who's licensed and bonded and, check their licensing information with the Construction Contractors Board of Oregon is a safe way to potentially avoid some of those contractor scams. But also that payment up front, be very cautious about it because they may not finish the work or they might do a poor job and may not return your calls. So we'd love to save you from that heartache after the fact. Our recommendation is to not pay a contractor the full amount up front or sign your insurance settlement payment. Some contractors will offer to, I'll work between the insurance company and I'll take care of that relationship. We'll take care of you. And then you're basically signing your rights away with the insurance company. So that's kind of the thing to be aware of. A contractor should expect a down payment when the contract is signed and the remainder when the work is completed. That's something to, generally expect.